Looking at the current status, the bank has 120 branches spread throughout the 8 provinces in the country. Branch network is supported by 500 ATMs, 2,500 points of sale, and cashback services offered by 18 supermarkets. In terms of number of staff, we now have grown. We have 4,500 employees. We have increased to 3.4 million depositors and 700,000 borrowers. The main drivers of the rapid growth and success principally has been the business model. High volume, low margin strategy has been adopted by the bank and crafted the model. The simplification of banking. The second one, of course, is the business approach. The bank has focused heavily on the bottom of the pyramid, where the numbers are significantly high. And then we have become a fully market-led organization where products and services and their pricing is determined by research and huge competencies in converting the research findings in products and services. In terms of staff, the 4,500 employees have been instrumental in developing the bank because of being passionate to the transformation of lives and livelihoods through provision of financial services. Our IT platform has been a major support in rolling out the bank. Its robustness has enabled us to roll out the bank more rapidly with inbuilt controls that has enabled us to manage rapid change. And of course, the huge support that we've got from our customers has driven the bank. You might be aware Equity is more of a savings bank. So it's a liability-driven bank with the customers being the driving force. MicroSave have played a significant role in the development of Equity from inception. It is MicroSave that helped to build the competencies that we have in Equity Bank, and particularly transforming the organization into a market-led organization. The competencies we have in research and product development were all trained through MicroSave effort. The toolkits that we use in the bank, whether it is risk mitigation, or product development, pricing, costing, are all developed by MicroSave. The strength of the bank in transiting through a change management process have been supported by MicroSave all through. And the bulk of the training of 4,500 employees is through in-house training. We have developed trainers within the bank. So far, we have 200 trainers who specialize in different areas of operations in the bank. In strategic areas, the bank has developed training programs with Harvard University, ISA Business School, and Strathmore Business School, where very specialized skills are offered at these business schools to the top management. But for the bulk of training, it's in-house, based on training modules that we developed with MicroSave. Equity is challenged in terms of delivery. It cannot rely on brick and mortar to reach its more than 3.4 million crowns. And innovation and creativity has played a significant role in helping devise cost-effective mechanism of reaching the customers. And two of the major products that have evolved out of that is electronic delivery channels. At the moment, we have 500 ATMs dedicated to serve the huge number of savers. And we are happy to say 81% of all cash transactions are now handled by the delivery channels. The second one has been innovation in the mobile telephony space. And we are now seeing the cell phone being able to process 18 of our functionalities, enabling convenience, affordability to our customers to transact from their homes and from their offices. And we are seeing so far about 200,000 customers embarked on internet banking. We see it as the way to go into the future, given that computers are now becoming readily available. The youth seems to be very keen in the use of electronic banking channels. One, because they offer them convenience, and two, enables them to not to move from one area to the other to access banking facilities. I would say the biggest challenge one confronts in rapid growth is that aspect. How do you ensure you are growing while you are remaining profitable and consequently sustainable, and that you don't end up with a poor quality asset portfolio, or you lose control of the internal control mechanism? So that aspect is critical, it's important, and needs to be managed. The second one is the ability to match growth with growth in capacity and competence within the organization. It's a great risk to grow the business without growing the competencies and capacity, both in human resource, in the IT platform, and the strategic capability of dealing with the challenges that emanate from rapid growth. Looking back over the last 16 years that I've been at the helm of equity, I would say we have made numerous mistakes. But the critical one that I still regret having made is initially being a supply driven organization where we could sit down in the boardroom and make decisions affecting customers without consulting them. When we learned the mistake, then we build huge competencies in research capability so that our decisions are made with reference to the needs and aspirations of the customers. We have also made mistakes in terms of timing, when to change some of the policies. Sometimes you prolong a policy beyond its usefulness and fail to know when you need to terminate. So, at what moment do you need to change? And lastly, is challenges that we have made sometimes not building capacity in good time, and sometimes in the past we have had moments where we have felt overwhelmed by growth. We have also made mistakes in terms of product development, where we've developed a product, short-circuited the whole process of product development, and then realized when it is too late and we have rolled out the product, some features that ought to have been noticed if we have carried through the whole product development process. We have also made mistakes once in a while in handling staff, whereby we are not very sensitive towards the needs of the staff and are more focused on the needs of the business without knowing that it is the staff who drives the business.